Welcome to weekly view on markets. Nifty gained 0.71% for this week as it gave a big pullback on Friday from lower levels. Market was weak in the beginning of the week. Market traded in a cloud of suspense because of Heidenberg report on Monday and Tuesday. Overall, there is not much impact of the Heidenberg report on the markets. Mid cap and small cap sectors also pulled back on Friday, posting around 2% gains. Mid-cap and small-cap tech stocks also ended in the green for the week. Markets are looking forward for a rate cut in US, followed by a rate cut in India also, as inflation is coming down. Because of this, we have seen a big rally on Friday. Earnings of large cap companies were muted, but earnings of mid and small cap companies were better, and they are very encouraging. We may see more buoyancy in mid and small cap stocks going further. Long term charts look very healthy and investors should remain invested. Nifty closed at 24,541 with a gain of 173 points for the week. Bank Nifty closed at 50,516 with a gain of just 32 points. It means mainly Bank Nifty consolidated. Mid cap index closed at 57,656 with a gain of 481 points, a gain of 0.84%. Small cap index gained 26 points, closed almost flat. India VIX is at 14.40. It has slightly down. Let us look at various sectors. Information technology gained the most, that is at 4.7%, because the inflation in US has come down. And as the inflation has come down, there is a hope that in the next Fed meeting, rates will be cut. If the rate cut happens in US, it will be good for the IT stocks. That's why we have seen a big rally in the IT sector stock. Consumer durables gained about 3.59%. Realty sector gained about 2.58%. Auto, pharma, private bank all gained 0.5 to 1%. PSU stocks lost about 2.15%. They had run up a lot recently. Media stocks lost around 2%. Energy companies lost about 1.05%. Commodities, metals, healthcare, they all lost less than 1%. Now let us look at charts. This is the daily chart of Nifty. We can see here I have drawn the trend line and Nifty has gone above this trend line and closed higher at 24,541. As per the chart indication, the Nifty is likely to continue its up move in the coming week also. This is the chart of Nifty mid cap index. Mid cap index also you can see on the chart it is trading higher. This is on Friday's green candle and it is coming near the resistance level of around 57,600. And if this resistance is crossed, then we will see a bigger rally and mid cap index may go to all time high of around 59,000. This is the daily chart of Nifty small cap index. Small cap index also gained on Friday, but still it is trading below the crucial resistance line. Small cap index has to cross 18,400 levels. After that, we'll have a bullish view on small cap index. This is the chart of Bank Nifty index. It has closed at a support level, and since it is at the support level, Bank Nifty is likely to go up in the coming week. And Bank Nifty has a resistance at around 51,200 to 250 level. If that crosses, then we will see a rally up to 51,500 in Bank Nifty in the coming week. Now let us look at some of the market fundamental factors. Macroeconomic fundamentals of the market continues to remain good. RBI forex reserves is at 670.11 billion US dollars. It is down by 2.65 billion US dollars for the week, but 670.11 is at a good level of foreign reserves for RBI. Forex rate is at 83.94 per dollar, and dollar index, after touching a high of around 105, now it is at 102.40. So this shows that globally the demand for dollars is slightly coming down. When crude price is at 78.80 per barrel, if crude price continues to remain below 80, it is good for Indian economy, as we are importing more than 70% of our crude requirement. So due to import, our foreign exchange outgo will be higher if the crude prices are higher. Lower crude price means our foreign exchange outgo will be lower, good for the economy, and also the profits of oil marketing companies will be higher with a stable crude price. Gold price is at 71,395 for 10 grams 24 carat. This week we have seen a sudden jump in the gold prices towards the end of the week. Gold has hit a record high in terms of dollars, and in India gold price is at 71,395. FIIs have sold 8,627 crores during this week in equity, whereas the DIIs have bought 10,560 crore in equity this week. Continued DIIs buying is giving a support to the market. Why suddenly market has gone up at the end of this week? Because the US inflation data and also the CPI based inflation data in India has come down. Both in US inflation has come down, and India also, for the first time, the inflation data has come below 4%. That is below the target of RBI at 4%. The expectation is that in the next US Fed meeting, there will be rate cut in US followed by rate cut in India. Whenever the interest rates go lower, it is good for companies as their cost of capital comes down, which will boost their bottom line. That means the profit of the companies will go up. When the profits of the companies go up, the market will go higher because the share prices tend to go higher. Last week, everyone was worried that what will be the impact of Heidelberg report, the second report which has come about 10 days back. But we have seen there is not much of impact of this report on Indian market. Now, quarter one result season is over, and I have assessed the impact of the results, that is, the impact of the earnings on the valuation of the companies and also the valuation of the markets. Nifty is trading at 22.8 P, that is a historical P. And at the beginning of the result season, it was trading at around 23 PE. So there is not much change. Why? Because the results of large cap companies are not quite good. They are almost like flat. That is why Nifty trading at 22.8 historical PE and forward PE is around 20. And large cap earnings are muted. If the earnings pick up, then we will see Nifty going to higher levels. Small cap stocks do better. I- Generally, we have seen that during a high growth, like what is the GDP growth at present in India, during high growth and lower interest rates, the small cap and mid cap sector always does better. Their earnings tend to be higher. That is why there is a lot of buoyancy in the mid and small cap stocks. We can expect the sectors, mid and small cap companies, to do well in the coming quarters. So, what investors should do? Investors should remain invested. India's GDP is growing well. Of course, there will be a lot of geopolitical news, developments, and global news. But as long as our GDP growth is good, macroeconomic fundamentals are good, and is a good expectation of the growth in the corporate earnings. There won't be big correction in the market. Moreover, it is supported by a lot of liquidity from DIIs. Due to all these factors, investors should remain invested. They will get better returns in the long term from Indian markets. This is all for this week. If you like my video, please share with your friends. You can subscribe to my channel and you can ask your questions. I will reply. We'll meet next week again. Thank you.